Assalamualaikum. Good morning, the committee and the participants of International Conference on Economics, Business, Education, and Finance. I'm Feminia Dewi. I'm going to present our research with title The Effect of Exchange Rate, Inflation, Interest Rates, and Crude Oil Price on Financial Distress in the Air Transportation Subsector listed on the Indonesia Stock Exchange period 2012 until 2021. As we know that world economic growth dropped from 3.1% until 2% due to low commodity prices and rising uncertainty in financial markets. And there is also a global economic cycles and orders that took place that had an impact for these circumstances. During 2018, we have global uncertainty, and also because of the trade war between the United States and China. And before it already fully resolved, another reason, as we know, as the COVID-19, also make around 82.85% business had impact, and it is reported decline in sales. In terms of air transportation subsector, we can see here the exchange rate has weakened from 2013 until 2015 as a result of a significant unpredictability on the international financial market. In 2018, it is also depreciated again. And then in 2020 until 2021, the rupiah depreciated again. And then we can see here the inflation rate in 2013 is 8.38%, and it is significantly higher than the previous years, which is only 4.3%. And then we can see that the inflation rate in 2018 and 2019 it's slower down. It is around 2.27%. And then in 2020 and 2021, it is slowing down in 1.68% and then rise again in 1.87%. And it is all because of the COVID-19. And then we can see the next one is interest rate. In 2016 until 2017, we have here that the interest rate were reduced from 4.75% to 4.25% to support the economic recovery. And then what happened in 2018, the federal funds rate was raised, that caused the interest rate going up again to 6%. And then from 2020 and 2021, to stimulate the economic growth, the interest rate were reduced from 3.75% become 2.50%. And then when we talk about the oil prices, it's fluctuating during 2012 until 2021. Every year from 2013 until 2016, it is experienced decrease because of an excess of supplies and a drop in demand. But then in 2019, it dropped to $65, and then in 2020, because of COVID-19, it is dropped again until $41 per barrel, and then it is increased in 2021 at $71. And then because of the weakening of the rupiah, expenses paid during expansion and losses of subsidiaries, we can see here that the performance of PT Garuda and PT Air Asia in operating profit, it booked loss in 2014. because of the purchase of subsidiary and effort to reduce operational expenses. But in PT Air Asia Indonesia, it is reported net profit in 2016. After that, both Garuda and Air Asia book operating loss, and it become worse because of COVID-19. So we go to the research objects and methods. The method used in this research is descriptive and verification method with a quantitative approach. The independent variables used in this study are exchange rates, inflation, interest rate, and oil prices. And for the dependent variable is financial distress. And then the population is a subsector companies transportation air listed on the IDX for the 2012 until 2020. And then the sample is PT CRUDE Indonesia and PT Air Asia Indonesia. And then the data types and source is we use the secondary data, and then the data analysis techniques is descriptive statistic descriptive analysis, and then classical assumption test, and then we have a hypothesis testing by using the regression multiple analysis coefficient correlation, analysis coefficient determination, and then hypothesis testing. And this is the result of the financial distress. We can see that the financial distress, it's getting worse in 2017 until 2021. And then we can see here the statistic descriptive analysis. We can see that the dependent variable value for exchange rate, inflation rates, interest rates, and oil price are heterogeneous because the standard deviation is lower than the average value or the mean value. But for financial distress, the data is homogeneous because the standard deviation is higher than the mean value. And then we can see here the assumption classical tests. We can see in normality tests, because of the significant value is higher than 5%, it means that the data are normally distributed. And then by doing the multicollinearity test, we can see that the VIF value is lower than 10, and then the tolerance are higher than 0.1. So we can see that based on multicollinearity test, all variables, it is proven that there is no multicollinearity amongst the data. And then for the heteroscedasticity test, we can see that the result on the scatter plot graph with the dots spreading randomly above and below 0 on the y-axis, and it is do not show any regular pattern. That it means that there is no heteroscedasticity problem in this regression model. And then we can see in autocorrelation, we use the run test. The significant value is 0.818%, which is higher than 5%. That means that there is no autocorrelation in the regression model. And then this is the multiple regression analysis. We can see here the constant from the and the coefficient in the model. We can see that the exchange rate, or I can tell you the multiple linear regression equation is y equal with 40,408 minus 0.004 x1 for exchange rate minus 0.144 x2 for inflation plus 1.989 x3 for interest rate minus 0.217 for oil prices. And then this is the result of the coefficient correlation. It is resulted that the coefficient correlation is 81.4%. It means that it shows a strong correlation between variables, and then the coefficient determination resulted 66.2%, which is indicating that the variables of exchange rate, inflation, interest rate, and oil prices contribute 66.2% of the probability that a company will experience financial distress, while the remaining 33.8% is influenced by other factors outside the study. And we can see here that this is the partial test. We can see here that the significant value is for exchange rate is 0.002, which is lower than 5%. So it means that exchange rate has a negative influence, significant negative influence to financial distress. And it implies that the financial distress of the airline companies was impacted by the fluctuation of the rupiah's exchange, because it also have a tendency weaken or depreciate in the last 10 years. The companies already implemented methods like hedging exchange rate and negotiating over aircraft expenses, but then it seems not have a good impact to the financial distress. And then for the inflation, we can see here the significant value is 0.855%. It means higher than 5%. It means that inflation have no significant effect to the financial distress. It is because of the inflation from 2012 until 2021. The inflation rate is ranged between 1.68% until 8.38%, which is tending to be below 10%. So it's just like we can call that it is the mild inflation. And then for interest rate having a significant value 0.053, which is higher than the 5%, which is also we can see here that interest rate has no significant effect on financial distress. So that's because of the interest rate is around 3.5% until 7.75%. It is considered stable. So the company also around 2012 until 2019 have a restructurization on the trade debts by turning the debt into the long-term business debt. And then for the oil prices, we can see here the significant value is around 0.008, which is lower than 0.05 or 5%. So it is resulted a significant negative effect to the financial distress, because the majority of the company operating costs are allocated to aviation fuel, and then the operating profit will be negative, the effect. So if the oil price is increased, it makes the lower the operating profit. Okay, and then the next one is the simultaneous test. We can see here the significant value is 0.002, which is lower than 5%. So simultaneously, exchange rate, inflation, interest rate, and oil price are having a significant influence on financial distress. So this is the conclusion. During 2012 until 2021, the growth of exchange rate, inflation, interest rate, oil prices, and financial distress fluctuated and tended to decrease especially because of COVID-19. And then the policies put into place by the government and Bank Indonesia, and also because of the global uncertainty because of trade war between United States and China. And then for the result from the partial test, it is indicate that exchange rate has a negative and significant effect on financial distress. Oil prices also has a negative and significant effect on financial distress, while inflation and also the interest rate had no significant effect on financial distress. Simultaneously, the exchange rate, inflation, interest rate, and oil price has a significant effect on financial distress. So it is suggested for the company because of exchange rate and oil prices have a negative significant effect. So it is suggested for the company to continue use the hedging strategy to reduce the risk for the unexpected price changes. And then maybe they have to create or have a strategy to reducing operational expenses for leasing, aircraft maintenance, and then aviation fuel by employing aircraft effectively and efficiently. Maybe for the government, maybe we can work to strengthen the currency by growing export. So, and then also using a pricing strategy to balance between supply and demand for the aviation fuel. And then for the further researcher, maybe we can use the alternative macroeconomic factors. And then also for the financial distress, we can have other models instead of Alman Z-score like Zmijewski, Springate, and others. Okay, maybe that's all my presentation about the research. Thank you very much and have a good day.